morning traders, Joseph here from Eightcap. Welcome to Trade Zone's Asian session update for the new trading week starting on the 17th of the 10th. So we will start with some of Friday's action. So we saw retail sales and core retail sales came in mixed. We had a miss on the retail sales, but an increase above expectations on the core retail sales, and the UOM consumer confidence came in higher than expected at 59.8. Now this continued last week's confusing trend really of data really not doing what you'd think it would do. We saw that with the CPI, and to a degree we saw that on Friday as well. So you may think that it could be that data could be a little bit contradicting to the USD, but it wasn't. And the dollar index had a strong finish to the week, and that was after that strong move down on Thursday after the Fed minutes and the US CPI, and we saw a weaker end to the week for a lot of the other major currencies, the risk majors. So the Aussie, we can see in front of us now, nearly started to head down towards that low, but didn't quite get there. The euro as well, still sitting around that finish. Tested down to that 96 area. It's back into the 97s at the moment. So that topsy-turvy condition still continues. Now the pound did pull back on Friday, but it had a really strong two-day rally last week. We did speak about a bit about the pound. Now there's a few things still continue to come out from the pound. The Bank of England made comments on Sunday. We'll go over some of those. So they're not flying blind, and it's no way to run a fiscal system. We also saw some comments coming out of the UK media saying that there could be or will be a U-turn on tax cuts. The new UK finance minister has said that they could even see some taxes rise. Now this is in contradiction to what Prime Minister Truss has been saying. So we'll continue to watch that in the UK. But regardless, the bond market's another one that's coming back online today, unaided by the Bank of England. So it'll be interesting to see if there's any fireworks. At the moment, so far this morning, the pound is trading higher. We see that gap higher, and we're trading 0.65% higher to the USD and 0.68% higher to the yen. So we can just see that nice gap there, and it continues to push higher at this fair bit of resistance at this area, going all the way up to 167.44. Now, so we'll see what happens later with the bond market coming on without the intervention. But Governor Bailey has made it pretty apparent that if intervention needs to be made, they're going to make it. So they're going to continue to support the bond market. So we don't think that some of that volatility we have been, possibly I think we're going to see that start to settle down now. I could be wrong, but I feel that will be the case from here. And as we can see, just as usual, all week, all month, and for the last few months, going back to the start of the year, all the way back to the start of the year, we can see when the dollar goes down, they rise. When the dollar goes up, risk currencies fall. So this has been a pretty common theme, and we can see that pretty apparently. And I still think that the US dollar is the key driver at the moment, and that's being led by US policy. And there are other small, localized issues that are coming in that are having an influence, but currently we still believe that the USD and that policy is still the key one driving majority of the momentum at the moment, and we may see that continue to happen into the the near future. So that's my take on it at the moment, and until something does really change, we'll continue to look at to watch that as well. Obviously, we can't discount local events and local things that are going on in a particular market, as we saw some of the really strong moves on the pound. But overall, we still do think that the US dollar is the key driver at the moment. So looking at the US 30 at the moment, so we can see that pullback on Friday. That was after that strong day on Thursday. So I think now we'll just be looking to see if we can see the market firm up, and this is sort of in a mid-range, and I think it will come down to now to see if buyers are really in a bullish momentum point here, or if we're going to see sellers come back in. So at the moment we're seeing a range developing, and it's a very wide range. So 33.06 at the top, and roughly, you know, that 28.692 down the bottom. So we're just above the middle of the range, so we need to see some direction to give us an idea of which way the market wants to go next. We'll be keeping a bit of an eye on the US 30 this week. Now, the German 30 was another that pulled off quite sharply after testing resistance at that 12.660. It's not really a morning star, but it's definitely a failed high, so we'll see a similar story to the US 30. We have a bit of a range developing, and we'll need to see some direction set up. Now, just going on to a couple of other markets, so we'll be looking for the ASX to start lower this morning, and we'll just see this stage if we've got some prices coming through. And we have a 26.1 points lower at this stage, so we can see that pullback on Friday, and we'll just open a bit lower today. If we, it's very similar to the other indexes at the moment. If we do see a break of this low here and a move lower, we're still in this range type pattern here, but if we do see buyers come back into the market, we would really want to see a break above 67.96 or even, you know, a close above 68.20, just to show that there is you know, strong buyer control in the market. But we're yet to see that yet, but we do have a higher low, and we do have support at that 66.14, and we'll just need to see, you know, a bit of a statement or a push from one side of the market to really show which way short term to medium term we are going to see. So we'll need to keep an eye on the indexes this week to see if we do get some direction, because at the moment we still remain pretty range bound. So news wise this week, there's a bit coming up, and we do have a few things to keep an eye on. We have today coming out the Empire State Manufacturing Index. We have Kiwi CPI tomorrow. We have the RBA meeting minutes Tuesday as well, and Chinese GDP, which will be interesting on Tuesday as well. And they're looking for 3.4% on forecast this quarter. So the last data that came through was at 0.4%. And with everything that's been going on with COVID and what we're hearing about some of the issues in the Chinese economy, it'll be interesting to see if they actually do get that 3.4%. Later in the week as well, we have pound CPI. Now this is going to be a big one. It's expected to come in at 10% inflation. So that will be another one to watch. And as well, with everything that's going on with the UK economy at the moment, and it's not in a very healthy position at all. And further interest rate rises are not going to be seen as a good thing at all. But if it does come in at 10% or higher, that could continue to really show that the UK economy is just continuing to struggle at the moment with very high cost of living on top of the other issues they're experiencing. And now moving into the rest of Tuesday, we have Canadian CPI, the median CPI trimmed, and common CPI. And then later in the week, we have Australian employment data and the Philly Fed Manufacturing Index in the States. And so there's a few things coming out this week. It's definitely not as busy as last week. Again, we're just going to have to continue to watch some of the US data that's coming out, and US Canadian could be interesting this week. We have seen oil, oil came off very heavy on Friday. We want to see that we have a break of trend here and a new lower low. So we'll see if any failed rallies, if we're going to push lower, or if we're going to find some support. And buyers will continue to respect and push higher on this up leg that we saw previously. Now, so definitely keep an eye on the dollar CAD as well, with that Canadian CPI coming out. If we have a higher dollar, we'll look for this market to continue higher, and higher CPI also will boost that. May take away from that. So if there was a CPI miss, we'd look for this to continue higher if the dollar continues to be firm this week. Again, just retouching a few things. Risk currencies continue to trade in downtrends. The Aussie is looking a bit worse than the euro and the Great Britain pound at the moment, because it doesn't have these higher lows here. So we'll need to see if these markets can come back if the dollar does turn this week. And that's some of the ones we'll be watching on top of the US 30 and the other stock indexes to see if we can find some direction with ranges, continuing to develop. So that's this week's update. We hope you have a very good trading week. Thank you very much for your time this morning, and we wish you all the best with your trading this week. Thanks, and bye for now.